Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 21st of January. Starting off with the FTSE 100, where I suppose it's not quite as bad as it could have been. There was a risk of hitting 10,000, but the low yesterday, 10,050, and we're quite well above that now. We had the risk of hitting the floor of that October rising trend channel around 99.80, but so far we've managed to get away with it. RSI is still well above the neutral 50 level, which is a plus and might explain why we've had a decent bounce from yesterday's lows. Still need to see a close above 10,200 really to give us the chance of a move up to the top of that channel as high as 10,500 by the end of next month, which seems rather a long way away at the moment. Though, we can't get through 10,200 for the risk of a 99.80 test. Worst case is that there is a rug pull, however temporary, down to the 50-day line, 98.38. We obviously tested that area back in December. Moving on to the DAX, and here still on the edge in terms of bullishness. Two gaps down in the recent past, unfilled gaps to the downside, which is normally a bad look. Almost guarantees that we'll have to test the 50-day moving average there at 24,200, and we'll have to do that at least while there's no end-of-day close back above the top of the gap from the start of the week at basically just under 25,000. So under 25,000, looking for 24,200 on the DAX. RSI has also fallen below neutral 50, so that tips the balance in favor of a 50-day line retest. But maybe that's the place to go long with this market and hope that it zigzags up to 25,500 again later in February. Maybe on to the cryptos, and probably in terms of the what's happened here, not very good is the best summary. Fallen back below the 50-day line yesterday with quite a bump, and that's also falling there at 90,000. Let's call it 90,300. Below that, have the risk of a test of that uptrend line there from October 2024. Unfortunately, at the moment, the setup with the bull trap through 95,000 suggests that we might actually have to test the 80,000 area again, which really wouldn't be great if we had an end-of-day close back below 86,000. On to Ethereum, and here, similar picture. In fact, could argue worse picture in the sense that we were actually trading right on that support line. If you're a bull of this market, you would probably be looking to buy at this very point now on the April uptrend line, so around 29.60. Otherwise, there is the risk of a test of November support, 26.22, if we stay below that 50-day line there at 30.85. So not looking good at the moment at all. RSI at 39 as well, so deeply entrenched in that bearish scenario here. Moving along to gold, and here it was rushing, well, it currently is rushing to new highs. We were looking for 4,800 by the end of next month, but obviously we've done that by the end of this month. And the question now is what the trajectory is here. The most likely scenario is that we're going to head towards that July resistance line there, which I've just managed to extract from the ether. That is heading towards the 5,400 level, and I suppose the current rate of progress, we might even see that by the end of next month, while we're above the latest gap there at 47. So above 47, looking for 54, whether it's next month or in March. And I think that the lowest here, probably 45.50 to 80 on any rug pull that we get, which obviously is a little bit overdue at the moment. But ideally, we stay above 4,700 and go for the low 5,000s in pretty quick order. Onto the stocks, and one of the most followed stocks around, which is Avacta. Good news today with the FDA thing, but always the problem here of a rug pull for one reason or the other. It just seems to be three steps forward, 2 steps back, or even 2.5 steps back. What's interesting here, though, for December, January, is that we managed to bounce above the rising 200-day line. That tends to be a leading indicator on the upside and does imply that while we're above 51 pence, we could head up to 69 pence. The rug pull from last month notwithstanding, that was absolutely horrible for this situation. If we do break back below that 50-day line, then the next level down is towards 40 pence. So ideally, we don't break back below that 200-day line in the floor of that channel there from back in May. On to a stock which seems to be finally rehabilitating itself, which is Acuity, some nice contract news from the company. Bear trap gap reversal, one of our favorite setups. We've held the top of the gap there at 0.82, above that, looking for 1.11 pence, which is the top of that broadening triangle from back in September. Ideally, there's no breakback below the now rising 50-day line at 0.85 pence. Next up is the situation at Delta Gold, which got off for a very good start, actually, apart from the dip that we had earlier this month. Here you can see that had that rising trend channel. We hit our 26 pence target right on the nose. So looking forward to calls like adulation on that particular call. But above 26 pence, we've been looking for 37 pence. End of day close above 26 should be enough to get us up to 37 pence by the end of next month. Ideally, we stay above yesterday's low at 22 pence. We were looking for 23 pence as being an end of day close stop loss. One of the RNSs of the day is Goldstone, where I think £2 million has come through the door, or could be coming through the door. That's helped the shares overcome their squeamishness about the funding situation of the company. We had that top of that trend channel there from August at 0.74 as a target, and obviously that was hit today. What we're looking for now is an end of day close above 0.74 to give us the next target, which I will then also extract from the ether. And that's probably along the lines of what I've drawn there. So above 0.74 up to a penny, I think would be fair by the end of next month on Goldstone. Ideally, whatever happens, we stay above the old resistance there from December, 0.65 on an end of day close basis, maybe the 200-day line at 0.58 at a stretch. Lots of very smug people in Orosur mining, and here you can see why. Rising trend channel there, heading for 43 pence by the end of next month, and we're looking at that while we're above recent resistance at 32 pence on an end of day close basis. It looks as though this is rising in a rather exponential fashion. Moving along to another stock which has done itself proud, which is Pulsar Helium. Here you can see that we had our rather ambitious target there, around 74 pence, and that's been blown out of the water. Next level up is probably going to be the upper parallel of that rising trend channel from August, and that should be towards the £1.15 area, and looking for that maybe by the end of next month. The only problem at the moment is the stop loss situation. Probably the tightest one could say is around the 80 pence level, so above 88 pence on an end of day close, looking for 115 on Pulsar by the end of next month. There's an argument for saying that there is a resistance line projection there, and almost going for the same area really on that one. So maybe that gives people more confidence that we can head up to £1.15 by the end of next month. From a stock which is completely on fire to a stock which not quite on fire at the moment, but a bit of a couldn't resist looking at this one. It looks like we've got a rising trend channel base. We've had an extended base here at Physiomics for the last 6 weeks or so. Gap through recent resistance around 0.28 above that, looking for well, not only the 50-day line, which we've already touched, 0.32, but perhaps the resistance on the way down, 0.37 or 0.38 by the end of next month, or hopefully a bit sooner than that. But gaps off the low, unfilled gaps off the low, difficult to ignore on any situation. Really pleased to see that Sovereign Metals has finally stepped up to the plate and actually exceeded the target we had there, 37, the initial falling trend channel target. Next level up should be 55 pence by the end of next month, especially while we remain above the previous target there. It's 36 pence. You can see that we had multiple RSI 50 rebounds, and that was a correct predictor of the rally that we've had today, as well as a sideways shuffle above a rising 50-day line, which we had ahead of today's announcement as well. So two very strong signals there on Sovereign Metals, and it's good to see that they've actually worked, which is always a bonus. Moving on to Tan Delta, and here you can see that we've got this perhaps rather obscure rising trend channel, but that's where I'm drawing it. Top of the channel there, and the recent highs, 55 pence. We're looking for that while we're above the 50-day line at 33 pence on an end-of-day close basis. Didn't want to look at this stock either, but Velocity Composites has broken through its 50-day moving average. If you look closely, you can see that we're very close to that rising. If that happens in the next day or two, then we're looking to at least retest October resistance, maybe the top of that falling trend channel at 26 pence. You could actually argue it's a bit higher than that, up to 28. So 28 by the end of next month, while we're above the 50-day moving average at 16 pence. On to Valereum, which is looks like it's come up with a decent deal today. And here, spike up within that rising trend channel there. That's heading for as high as 27 pence. Doesn't look like we'll get there today, but above the floor of the channel and the 50-day moving average at 12, looking for 27, perhaps as a near-term target for the end of next month. Wishbone, decent mover even on quiet days, and here you can see that we've got this. We've had this rebound off the rising 200-day line. I think I talked about it a couple of days ago. Looking for further gains, maybe towards 100 pence by the end of this month, while we're above the 50-day line at 74 pence. That's it from me today. More updates tomorrow.